and in the alternative market.
Right.
So regarding regulation, it's there are no issues. In fact, some of the issues in non-interest banking make regulatory work very, very interesting.
How so?
I explained to you. We don't need to talk so much. We've here in channels, we dealt with the issues of CPs and BAs in Nigeria and what happened to the banks. When regulation came and refined the CPs and the BAs in the banks, it said what? CPs must represent actual importation or transactional assets. That is exactly what Islamic banking is saying, or non-interest banking, as it were in Nigeria. You must have a product at the end. Don't do transactions just because you can juggle figures together. Let us see the business at the back of it. And that is why, those people who go in this area enjoy what they do. Again, this is putting aside all the sentimental reasons to say, okay, because I'm religious, let's put that aside. We're looking at the professional area of the business, and there's good money to be made, as you will note in the bond we were talking about.
Yes,
it's paying the investors 14.75% per annum in a market where, at the time that bond came out, the market was really low. There was no money available. The rates were against the bond, and investors still. And then, who are these investors? Mostly financial institutions and HNIs. Were they Islamic institutions? Probably only one.
So are we expecting to see more participation in the Sukuk bond, for instance?
Exactly. I would expect that the next thing for us to do in the country is to do a sovereign Sukuk, maybe dollar or euro based, and to build some massive infrastructure for the company, maybe rail lines, maybe housing, accommodation, and something like that, because we're ripe for it now. But
then, there's also been this issue of collateral.
Collateral is not an issue. I stand here, I said, head of risk in my institution. We don't joke. Nothing in non-interest is you can't charge. You can't take a collateral. It's just a misnomer. People are misguiding people. We take collateral in non-interest. I mean, you do your credit work just like a bank does it. You check all your C's, the character, the capabilities and everything. You check everything. You take your collateral. You take guarantees as well. These things are done. Some of the products we have in the market that are in markets there now today have bank guarantees backing non-interest transactions. So, I mean, there's no issue with risk management, and I foresee more banks are joining this. I'm aware in the last 1 month or so, 2 commercial banks have opened windows, so more banks are going to join. It's going to become a case of, if you don't have this product offering, non-interest product offering, you will lose customers.
We also have then, Islamic insurance.
Yes, I was going to mention that.
Because we know that apart from the bond, this is also another product offering that could also ginger investors.
Very interesting, and I'm very passionate about this area. Why? I read the actuarial science, which is insurance.
All right.
And I've also been worried about the contribution of insurance industry into the pocket of the country. We have less than 1% contribution, very low. And people seem to be afraid of insurance for many reasons. And this non-interest insurance called Takaful has brought an option that I believe will sell. Not only that it will sell, it is scalable. You go to Oshodi, the typical market seller has only one table, no address. She has goods. She wants to be insured, and nobody can provide anything. You go to the commercial motorcyclists. We were told about 2 million of them in Lagos. No insurance to cover them. All these areas are available under the non-interest insurance. How does it work? Very simple. People come together, agree to guide themselves against certain risks. They own the insurance pool. The pool is divided into 2. One is savings for them, and one an insured fund, which you pass to the non-insurance insurer. And then when whatever risk is underwritten there happens, they get paid from that. And whenever they decide to discontinue with it, or somebody wants to move out, there's a portion of the money that still reverts back to the insured. So to the extent people now feel they own the insurance scheme, not like a third party owning the insurance scheme, and it makes it a lot more interesting.
Is it only for goods and services, or does it also apply to vehicles as well?
Of course. There's one international one can quickly look up. It existed in the UK. Outsold. It's called Salam. It's a motor insurance. And I believe, from what I've read from some of the local, there are 3 main companies, in the area in Nigeria that are already out. They have car insurance and life insurance already in the area of non-interest insurance.
Well, looking at the fact that we see this bonds and all the rest, what about on the capital market? Do we have investment windows in the capital market for non-interest banking?
We have, like I mentioned, the first product that came out in 2008. I will mention the name now. It was a non-interest offering. Is still existing on the stock market. It's under the memorandum listing. It has existed since, and it's doing very well. That existed. About a year ago, we saw the introduction of an Islamic index on
NSE Lotus 2.
Yes, that's an interesting indicator, telling us that since 2008, if you had invested in those 15 stocks that are deemed to be Sharia compliant, you would not only have saved your money, you'd have made a lot of money, more than the all-share index. And up till now, it's outdoing the all-share index. Very, very interesting. Apart from that, you've also heard that Pencom has come up with its own exposure draft for the non-interest pension offering. Nigerians are actually asking that they want their pensions to be non-interest as well. So, it looks like out of the whole gamut of the financial sector, the only area we're yet to see any significant contribution is reinsurance. Because we have insurance, we have banking now, we have microfinance, we have Lotus, we have we have fund managers in capital market, and I would think it's only in the area of reinsurance that we've not done anything. The capital market is certainly, I would say, ahead of the commercial, ahead of banking in this area, the money market, ahead of the money market, because the first institution wholly owned that runs this type of investment came out in the capital market. So to that extent, I believe my point is.
Well, just before I let you go, Taufik, we've talked so extensively about this issue, and we really can't keep talking because it's really, really wide.
It is big.
We can't cover everything today. But looking at it now, is non-interest banking a wise banking option for economic growth?
Certainly speaking, I have no doubt about it with the issues we have regarding delivery of services to the common man of the country and the huge deficit in infrastructure in the country and the kind of monies we need to raise, trillions of naira, to build this country. We're not going to get it in the conventional industry where the owners of those financial institutions are also looking for money in that same market. And then with the rate at which we are now taking sovereign debts in 2 digits, I am certain that we're getting to a point where we will not be able to move further.
Well, I'm sure owners of non-interest banks as well would want profit for themselves, not just the bankers in the conventional banking sector.
Exactly. They want money for themselves. But what I'm trying to tell you is the hit rate. If Nigeria comes up with a bond, say Euro bond, and it is denominated dollar and it is interest based, and US come at the same time with a bond, the rest assured that the investors will pick the US bond faster than, this is what I'm trying to tell you, the hit rate. However, if you come up with a non-interest bond, because there are not so many of them, people actually buy them and sit on them, you're going to get people who will not only bring money to you, they will also bring the expertise to ensure that those infrastructures are delivered. To that extent, I believe that we would, at the point we'll have no choice. We have projects, huge projects. The rail line project in Nigeria, we know how much it's going to go. And if we're going to the same interest market, that with all the turmoil, it's almost impossible. If US itself is accessing this non-interest bond market, and UK can also build its Chelsea barrack with this bond market, and Germany has built its state, Saxony-Anhalt state, a federal state with this type of non-interest, certainly it looks like this is the direction everybody's going. I would say we would have to do something in that regard.
Taufik, thank you so very much for joining us on the program today, and